What's up guys, it's Antoine Martel here, and in this video we're going to talk about is now a good time to buy or sell real estate. Now whether you're talking about buying a primary residence or investment property or multifamily real estate, we're going to cover all three of those things throughout the entire video, and I'm going to share with you my thoughts on if you should buy or sell real estate, and if so, what you should buy and maybe what you should sell in the next couple years. Please make sure to like and subscribe so I can keep opening up my portfolio, my strategies, share with you guys what my team and I are doing to buy 10 to 20 houses every single month. So you've probably seen all over Instagram and social media that home prices are going crazy over the last 24 months, especially since the beginning of the pandemic. A lot of people online are saying that now is not a good time to buy real estate, but I beg to differ. Over the last 12 months, my team and I have bought close to 200 single family houses, and we've sold over 100 units of apartment buildings. Now, why did we buy single family houses and sell multifamily? I'm gonna tell you. No matter your experience level, whether you've bought 100 single family houses, you don't own any houses, you have a primary residence, no matter your experience level in real estate investing, I'm gonna give you some practical advice, so stay tuned till the end of the video where I'm gonna share with you my thoughts if you should buy or sell real estate in the next 12 to 24 months. Median home prices in the US hit an all-time high of $360,000, up 14% year over year, and up 30% from the same period in 2019. Right now, there has never been a better time to buy real estate and sell real estate. Let me explain. So like I mentioned previously, my team and I have bought over 200 single family houses in the last 12 months. The reason why we started to buy a lot of those single family houses is because there is a ton of inventory available, contrary to what everybody is telling you online. So there is a lot of information online about interest rates and record low inventory. So for you personally, what should you do in the real estate market today to take advantage of this opportunity? Personally, my team and I have been buying single family houses and selling our apartment buildings. But why are we doing that? The reason why is because you should take that equity from your single family house, use that money to rent, and then take the rest of your capital and go invest it into single family home rental properties across the country. There's a lot of speculation about the real estate market right now that we are at all-time highs and you should really be selling everything. You shouldn't be buying any real estate, but I beg to differ. Now, sure, there may be some real estate markets or industries or sectors like the office space, hotel space, that may have some sort of correction over the next 12 to 24 months. But I believe that certain real estate markets across the country, especially in the single family home space, still have a ton of room to grow if you're looking at the right cities. US News predicts that 2022 will be a year of continued high demand and record home prices. And Zillow predicts that home prices will increase by double digits in 2022, driven by a perfect storm of pandemic factors, demographics, and demand versus supply. And I tend to agree. I think a lot of the home prices across the country, especially in the Midwest, are going to continue to rise. So if you live on one of the coasts like New York City, Los Angeles, San Francisco, real estate prices and home prices have hit all-time highs and they're becoming very unaffordable. This is causing a lot of movement across the country. What I mean by that is a lot of people on the coast are moving now into the Midwest and moving to smaller cities in Middle America. So if you own real estate in one of these big cities across the country, especially on the coast, I'm pretty sure that you're worried about the real estate market tanking and what you should do with all that built-in equity that you have. So with all that being said, there are certain places to buy and certain places to sell and certain strategies that I would recommend implementing over the next 12 to 24 months. So if you live in one of these markets that has increased tremendously in value and you have a ton of equity in your real estate currently, you might want to look at different ways and different strategies to get that equity out of your real estate. I would recommend to sell if you are in a few different situations. If you bought a primary residence and you have a ton of equity in that primary residence, it may be a great time to sell. Take that cash and buy investment rental properties and live off that cash flow. So there are some fears out in the market that, oh, if I sell my primary residence, I may not be able to go and afford another primary residence because we are at the top of the market. And while I agree with you, I would not recommend going and buying another primary residence. What I would recommend is selling your primary residence, taking the equity that you have, using that to live off of and pay for rent, take the rest of the capital, invest that money in cash flowing rental properties, use that cash flow to pay for all your living expenses. But we'll get into that a little bit more later. So if you have any kind of real estate property that has appreciated 20, 30, 40%, there are two things that you can do. The number one thing you can do is refinance. It's a great time to refinance before interest rates begin to go up. So what I would first try to do is go and refinance that rental property. You can pull out some capital from that rental property, use that cash to go and continue to buy more and more investments and more rental properties for cash flow. The second strategy that you can do if you cannot refinance is sell that property. The benefit of doing a refinance over selling is that if you can refinance, that money is all tax-free. Whereas if you were to sell that property, you're going to have to pay capital gains tax on that money. So if you're worried about the market going up after you sell one of your rental properties, I wouldn't be worried about that. So let's say you bought a house for $100,000 and that home is now worth $200,000. That leaves you with $100,000 of built-in equity on that property. Now what I would recommend is doing a refinance first. If not, you can sell it. Let's say you do the refinance, you pull out some capital, and all the other houses in the neighborhood are worth $200,000 to $250,000. You still will be in a better off position by doing a refinance, pulling out that money, and then buying 2 or 3 more rental properties, even though they may be at the higher price. I encourage you to run the math and run the numbers on these rental properties to see if you do refinance one property, use that capital to buy 2 or 3 more, take on additional debt to see what the numbers look like at the end of the day. Now, if you are going to implement one of these strategies, refinancing or selling, make sure you have a plan to implement that cash and spend that cash as quickly as possible. The worst possible thing you can do right now is leave any kind of capital in your bank account. So shortly after you refinance or sell that property, make sure you go and start buying more as soon as possible. Leaving cash in a bank account is the worst thing you can do right now due to inflation. Inflation is the general increase in goods and services across the country. So if you have cash in the bank, due to interest rates, that cash will be devalued every single month as the inflation rates continue to rise. So due to a lot of jobs going remote, there are a lot of people leaving the coast and moving inland. So if you are thinking about selling, I think it is a fantastic idea. Especially if you have equity in your house or you bought a house a couple years ago and that house has appreciated, I would definitely recommend taking that capital, moving to a cheaper market where you can work remotely, take that capital, use it to pay for rent, use it to pay for food, and then with the rest of your capital, I would get it immediately out of your bank account and start buying rental properties, start buying real estate. So when shouldn't you sell? I think you should not sell your property if you don't have any built-in equity. So if you bought a house, you put 20% down, and maybe you have a little bit of built-in equity, I would not recommend selling that house. If you have something like 40% equity in a property, I probably would recommend selling that property or refinancing it. So if you have 30% equity or less in a property, I would not recommend selling that property. The reason why is just not worth it. With the closing costs, the agent fees, probably paying some sort of prepayment penalty on the loan, it's just not worth it to sell that property with just 30% in equity. Also, if you're in a situation where you just refinance your property, you probably don't want to sell it due to the fact that you probably don't have more than 30% built-in equity. So let's say you have a rental property right now or any kind of real estate at a 2 to 4% interest rate. Now you may be worried that if you sell that property, you're gonna have to go buy something else and get a 5, 6, 7% interest rate in the next 12 months. Now while that may be true, it's all about the return on your investment. What I mean by that is that if you have a rental property and the debt is currently 3% and that property is making you a return of 10%, it may be worth it to sell that rental property, take that capital, buy a different rental property, pay the higher interest rate because that rental property may provide a 20% return, 15% return. At the end of the day, you should really be looking at the ROI, the return on your investment. Don't worry about the debt, don't worry about the insurance or interest payments or anything like that. Worry about the bottom line return on your investment. So before you sell anything, before you refinance anything, make sure you have a strategy post refinance and post sale. What I mean by that is I don't want you to go and sell or refinance, get $100,000 in the bank and then not have any clue what to do with it. So before you go down any of these paths, make sure to look at the current real estate market, look at markets across the country, analyze some deals, run some numbers before you do anything. So before you sell or refinance, make sure you know exactly what you're going to buy and what the return on investment would be for that investment. So buying in the current real estate market is a complete frenzy. People are outbidding each other, people are buying with cash, people are removing their contingencies, they're buying houses without inspections. Some people are even buying houses without any appraisal contingency, which means even if their house doesn't appraise, they are still going to move forward with the purchase of that property. So just a few years ago, this is stuff that would never happen. People would always write up their offers with tons of contingencies, appraisal contingency, financing contingency, and even an inspection contingency. But now with the current real estate market and record low supply, people are out there making ridiculous offers on properties. So if you have cash in the bank and you're in a big city and your city is too expensive to invest in, I would recommend looking out of state. So what I'm doing personally is I'm buying houses in the Midwest. So Memphis, Cleveland, St. Louis, Detroit, Cincinnati, and you can start looking in those cities as well and look at a ton of different cities in the Midwest. So most big cities across the coast don't make any financial sense to invest in for cash flow. The reason why is because the rent to value ratios on these properties doesn't make any sense. Let me explain. So typically for cash flowing rental properties, you want to be at a 1.0 rent to value ratio. This is called the 1% rule. So let's say you have a single family house in Memphis, Tennessee for $100,000. That house needs to rent out for $1,000 a month in order for it to cash flow. Now again, this is just a quick rule of thumb and an easy way to analyze real estate deals across the country. So let's take a single family house now in Los Angeles, a house for $1 million. We need that property to rent out for $10,000 a month for it to cash flow. But typically in a market like this, those properties will rent out for $3,000 to $5,000, not $10,000. So it's a 0.5 rent to value ratio. So the formula for the 1% rule is, first of all, you take your purchase price. Let's say you're buying a house for $100,000. Then you take the rent of $1,000, you take the purchase price and divide it by the rent amount to get you a ratio. If you buy a house for $100,000 and rents are $1,000 a month, that gives you a 1.0 rent to value ratio, or the rent is 1% of the purchase price. The only reason why people would be buying houses in real estate markets on the coast is because they are scared to move out of state and buy stuff that they can't drive to, that they can't see, that they can't touch. But if people would open up their minds and open up their view to the Midwest, there is a huge opportunity to buy there right now. So don't worry what others are doing or what others are buying. I want you to do what's best for yourself and give you the highest return on that cash sitting in your bank. Now, if you do want to buy rental properties that match this 1% rule, which I would highly recommend you do, the places that you're going to be able to find properties that match this 1% rule is going to be the Midwest. There's a way higher likelihood that you're going to meet this 1% rule in the Midwest. The reason why is because the average home price that you can buy in some of these markets is anything from $100,000 to $300,000. Compare that to the coast when the average home price is $1.5 million, $2 million. Rents for the last 40 years have never gone down. Rents in the Midwest, just like on the coast, are going up at extremely high rates. But I think that as more people leave the coast and move into the middle of the country, we're going to begin to see rents skyrocket in the Midwest. So I believe there is a big shift in the country right now in terms of the population and where the population currently lives. Currently, a lot of people live on the coast of the country in extremely high cost of living places. But I think over the next 3 to 5 years, as people start to work more and more remote, people are going to start spreading out. For example, there's a lot of people that I went to high school and college with that grew up in California, currently living at their parents' homes, and they're making $50,000 to $100,000 a year here in California, which barely affords them to go out and live on their own. They still have to live with their parents or under their parents' roof, but I think over the next couple of years, as more and more people move into the middle of the country, like Texas, Tennessee, Ohio, Illinois, there's going to be a huge shift of population from the coast to the middle of the country. So I think that as this shift continues over the next 3 to 5 years from the coast to the middle of the country, we're going to see the prices in terms of rents and home prices increase even more. Another reason to buy now is because mortgage rates are at a record low. Mortgage rates have never been lower in the last 4,000 years. Last week, Jerome Powell announced that the Fed would soon be raising their rates, but they currently remain near zero. These are the lowest interest rates that you may see in your lifetime, which is why it is a fantastic time to buy. So again, this is a rule of thumb. You should be buying rental properties close to the 1% rule. We sell properties a ton for 0.7 rent to value ratios all the way up to 1.2 rent to value ratios. And in today's market with real estate prices climbing, most rental properties that you may buy could be 0.7 or 0.8 rent to value ratios. So those properties will still cash flow even though they don't meet the 1% rule. Again, the 1% rule is just a quick and dirty rule of thumb so that when you're on Zillow, when you're on Redfin, when you're analyzing deals, you can quickly analyze something to see if it is in the realm of cash flow. So if you are going to buy something, what should you buy? So in the real estate market right now, there are kind of two options of things that you could buy. Single family houses versus multifamily apartment buildings. Now I would consider a single family house anything that has 1 to 4 doors. So single family house, duplex, triplex, or fourplex. Multifamily is technically considered anything that has 5 or more doors. So something like a 10-unit apartment building, a 20-unit apartment building, or a 100-unit multifamily property. I believe that multifamily real estate across the entire country is very, very overpriced. People are buying multifamily real estate across the country for 5 to 6% cap rates, while single family houses in those same markets could make a 7 to 10% cap rate. I think a lot of this pressure on the multifamily inventory is because a lot of people are selling their properties on the coast and they have $500, $1 million, $2 million in 1031 exchange funds that they need to spend. And when they have those funds, they would prefer to buy one building, a multifamily for 20 units, versus buying 20 single family houses. Even though the returns are higher for single family houses, a lot of people are just buying one 20-unit apartment building instead because it's easier and the financing is better. So unless you're in a situation where you have $500,000, $1 million, $5 million in a 1031 exchange, I would recommend buying single family houses over buying multifamily apartment buildings. So single family houses in the Midwest, you can buy these houses for anything from 80 all the way up to $150,000, $200,000 and still cash flow relatively well. Getting into single family houses across the country is also relatively affordable comparatively to multifamily. So let's say you buy a house in the Midwest for $100,000, you put 20% down, that's $20,000 out of pocket, plus $3,000 in closing costs. So really you're all in for $23,000 to $25,000, and that property will cash flow anything from $200 to $400 a month in positive cash flow after all expenses. So when you're buying these single family houses in the Midwest, you want to make sure that they cash flow anything from $200 to $400 a month after all expenses. These expenses include taxes, insurance, debt service, and paying a property management company to manage that property for you. So for example, let's say you buy a single family house for $100,000 in Memphis, Tennessee. That property after all expenses makes $7,000 a year in net profit. So that property would have a 7% cap rate. So when buying single family home rentals, you want to buy anything from a 7 to a 10% cap rate. Anything higher than 10% may be in a very high crime and dangerous neighborhood. Anything below 7% is not going to be worth your time. So also another reason why I prefer single family houses over multifamily inventory right now is that because single family houses in terms of renters has had extremely high demand due to COVID. We've noticed from a property management and a leasing perspective that a lot of people prefer to live in a single family house and be away from people than to live in a multifamily property and live right next door and have a ton of neighbors. So for example, in Memphis, Tennessee, we had a multifamily property and a single family home in the same neighborhood. The multifamily property, even though it was cheaper and more affordable, took 30 days to rent out, whereas a single family house, which was more expensive, rented out in just a weekend. So this isn't just a one-off example though. We deal with property management companies across the Midwest and they have been telling us the same thing. These property management companies manage thousands of doors in multiple cities across the Midwest. And they've been telling us that the single family houses over the last 24 months have been renting at record speeds, whereas comparatively, the multifamily properties have been sitting a little bit longer on the market. Another thing that I've done over the last 24 months has been selling all of my multifamily apartment buildings. The reason why is I started getting crazy offers on these multifamily properties. Properties that me and my team thought were worth $2 million, we were getting offers for $2.5 and $3 million. People were so eager to buy multifamily inventory over the last 24 months, even at super low returns, just so that they could go and buy multifamily properties because there was no inventory available. So if you have the opportunity to choose between a single family house and a multifamily apartment building, I would definitely recommend, if you're first getting started, to buy single family houses. Another big thing to think about is the amount of capital needed to invest in both of these different sectors. So in the exact same neighborhood, you can buy a multifamily property and make a 5 to 6% cap rate, whereas a single family house in that same neighborhood can make you a 7 to 8% cap rate. For a single family house, like I explained, you only need $20,000 to $25,000 to buy a $100,000 property. Well, let's say you're buying a 4-unit building for $400,000 or $500,000, you're probably going to have to put down 20 to 30%. So whereas if you were going to buy a 4-unit apartment building for $500,000, you'd have to come up with $150,000 out of pocket and put all that money into one deal. You could have taken that same amount of money and went and bought 10 single family homes. So if you're ready to buy, this is a really fantastic opportunity with record low interest rates to buy single family homes. So especially if you have equity in another real estate property that you can refinance or sell and take that capital and buy single family houses, I think this is a fantastic idea and it's a great time to do it. This is something that my team and I are doing personally as well. Nobody in my family has any primary residences, but we do have multifamily houses that we hold as a family. Over the last 24 months, we've started selling off these multifamily portfolios, taking that capital and putting it into single family homes. The other reason that I prefer single family homes over multifamily is because now the hedge funds are in the game. Currently, hedge funds in Wall Street only own about 1% of the single family home inventory in America. But over the last 12 months, if you've read any kind of news articles about it, they're dumping trillions and trillions of dollars into single family home rentals. Their goal over the next 10 to 20 years is to own 30% of the single family home rental property space. So it's a great time to get in before the hedge funds start to commoditize the single family home rental space across America. So the cap rate on a property is the return you would make on that property if you had no debt and didn't take on any loans. So is now a good time to buy or sell real estate? So the gist of it is, it's a really good time to buy and to sell real estate, depending on your situation. So I personally believe that it's a great time to buy single family houses across the country, especially in the Midwest. And I believe that if you bought right over the last couple of years and you live on the coast and you own a house, it's a great time to sell. I would highly recommend merging both strategies. It's a great time to buy and a great time to sell right now. Personally, we've been selling apartment buildings and buying single family homes. Let's say you owned a primary residence, it could be a great time to sell that primary residence, use that cash to buy rental properties. After all of this, I hope that you guys take advantage of this fantastic opportunity that we have right now. Interest rates are at record lows, the hedge funds are starting to buy rental properties across the country, and interest rates are beginning to go up. So no matter what strategy you want to implement, it is time to take action. Whether that's buying houses or selling some stuff you currently own, right now is the time to act before interest rates start going up and the hedge funds start buying more single family homes. So hit the like and subscribe button so I can keep producing content every single week for you guys. So make sure whatever it is you do that you take action. I think one of the biggest problems that we see is people watch these videos and they don't go out there and actually implement them. So I want you to take what you learned in this video, if you made it all the way to the end, take this information and go and act on it. Thank you so much for staying till the end of the video if you've made it thus far, and I'll see you on the next one.